Good afternoon, and thank you for joining us. The stock market finished the third quarter of the year on a positive note, led by AI investments. The Dow Jones Industrial Average closed at a new record high. The Dow and the S&P 500 had their fifth consecutive positive month. The Nasdaq had its sixth consecutive positive month. Both the Nasdaq and the S&P had their best third quarter since 2020 and their best September in 15 years. Unfortunately, the fourth quarter started with a federal government shutdown. There have been shutdowns since 1980, and 10 have led to federal employees being furloughed. The good news is the stock market is becoming used to this performance theater and is typically flat during government shutdowns. There were other headwinds besides the government shutdown. Consumer confidence continues to deteriorate at its lowest point since the Liberation Day sell-off. Investors seem to be banking on future Fed rate cuts to keep consumers spending. Last week we saw new tariffs on lumber, timber, furniture, and foreign-made movies. The labor market is another wild card. The current environment has been characterized as low hire, low fire. In other words, hiring is down, but layoffs are at a low level. President Trump's new 20-point plan to end the war in Gaza is an ultimatum to Hamas to release hostages, give up arms, and surrender. Absent that, Hamas will face the full force of the Israeli military with Washington's support. If Hamas accepts the plan, there are promises of increased aid and global efforts to rebuild Gaza. Goldman Sachs thinks the stock market is set up for a strong fourth quarter finish for the year. They cite our strong, resilient economy, good equity valuations, and further Fed rate cuts as reasons the stock market momentum will continue. Most important is the prospect of continued good earnings growth. As we all know, stock prices follow earnings sooner or later. They always have, and they always will. Thank you for joining us. We hope to see you next month.